Hello, everybody. Um, we're off and running. So now I gotta find my Discord. There we go. Hello. Um, what do you guys want to talk about? How about we start off with yesterday's trade? Um, this was awesome.
Your
I,
screen isn't connected.
it's what? Oh
Your
no.
screen.
Yeah, I'm not. I'm not sharing my screen, am I? All right, just a second. Oh, now I can't even do this. This is really entertaining. Discord. If you guys could only see what is going on. There we go. You got it now?
Yep.
All right. Just go full screen, you silly thing. Okay. Um, two pretty very easy trades here. We let the market, you know, just set up the range for the day. We had the pre-market range right here. Um, and as I said here, we let the market just do what it wants to do and tells us the general parameters of where we want to go. Um, I'll just use these lines for right now. But we had some kind of a channel like this. Um, and then at the market open, uh, we're just setting trend lines here. I had it kind of like this, and then I had a secondary right here. Um, that was looking awfully good. Um, I think this is where I got into the 437s, was it? I can't remember. I don't have my log with me right now, but um, or was it 435s? Four, I got the 433s later, I think right here. Um, and then we had the small channel right here, but then this channel was set right here. And this is where it got fun. Um, because it gave us just a nice rounded top right here. Uh, and you just played it all the way down. And that's the rules is you set your channel right here. And yep, you could have, a lot of people were, should I take profit here? Should I take profit here? And I'm like, that, that's fine. But we stayed below the thing here. And while I saw this big rushing star right here, I added to my position. Um, and I got out right here. The candle didn't finish yet, but once it went above the previous um, low, or high of the body, close, kind of a double top here. Um, that's where I got out of this position right here. And then at the same time, I hedged and got 433s. And funny, with the fib that I drew, this was the 38.2 is the uh, trend change. And we got right up to it and got rejected. That's when I was starting to look short again. Um, and we had this big topping tail with head and shoulder right here. As soon as we broke below this candle right here, a little aggressive, but that's when we got in, and then we played that big rundown for the rest of the day. Um, and then I got into, well, yeah, that's when I got into the what the 426s for next week. I got in at a buck 29. Right now they're at like 206. So I'm doing quite well on those. Um, but that's the way we do it, guys. Now, Ari, you said something about the Fibonacci's. Go going.
Yes, I'm having a hard time. I mean, I get it, but I just want to see you were talking about where you set it from at the beginning of the day, and then you wait for the second 30-minute candle to reset that. I'm just wanted to know if you could go over that part for me.
Yeah.
Thank you.
Okay. So you, I just go to the 30-minute chart. Now you're actually supposed to play. You're supposed to play this from the 30-minute chart also. It's a 30-minute strategy. Okay, so this was Friday. This is Thursday's. So I'll just take this off right here. And funny, look where the bottom was. What? Just outstanding. Just perfect. Doesn't happen all the time, but this played out. This is when I get an idea where I know that there's a lot of fib players really doing this. Uh, remove. I better be safe and do it from here. Okay. So here's the beginning of the day. Um, so you start looking. You start, around 8 o'clock, my time, Central Time. Uh, you can kind of cheat and start setting your fib for wherever it's at. Now you're constantly, you don't have to do it every minute. Just, you know, you got time. You fib. You can start fibbing from wherever it's at the time, and you go back to the previous day's close. Right, so that's the 14:30 candle. It closed right here at 3 o'clock my time, which is the bell. Okay, so at this time, here's your targets. Okay, but then when the bell rolls around, um, oh, that was the bell, 8:30. Okay, never mind. So 7 o'clock, you have it up here, 7:30. So you're just getting ready, and about here you kind of get a general idea where you're going to be at the bell, so you could start planning your targets for trading for the day. Okay, so here's the fib at the bell. Okay, now this is pretty tight. Okay, you want a bigger gap, a little bit bigger of a gap than this, but it is what it is. Usually when it's really tight and the target line and all these are scrunched up together really close, I don't even pay attention to um, I don't pay attention to the fibs until maybe the if the uh, first half hour candle makes a big move to the north side or the south side, then I'll fib it from there. Okay, but now Ari, what you're asking is the refib. Okay, now you let the first 30-minute candle close. Okay, so you have your original fib up right here, right? Now your second fib goes to the close of um, that candle. So now this put in a big, you know, doji here. So uh, it's going to stay right where it's at. Um, and then uh, these are your levels right here. So uh, let's say if at the end of the 30-minute candle, okay, this was the beginning of the candle, um, and then we had, let's say it was a candle like this, okay, so this is the end of the first candle way up here, right? Then you take that fib line at the end of that first 30-minute candle, at the end of the first 30 minutes of the day, you fib from that point. So that will give you your targets for the day, right? You got it, Ari?
Yes, thank you.
Okay. And vice versa. If the first 30-minute candle decides to finish down here, right? So at 9 o'clock my time, then you take this fib and you go down there like that. And then once it's down here, I mean, look at how tight this is. It's ridiculous. So you just don't play it for the day.
So you're fibbing from the 30-minute, but you were using the 5-minute yesterday, right? But you should be using the 30-minute if
If
you're.
if I was scalping yesterday, so that I felt more comfortable playing the 5 minute, but you still only fib from the 30-minute candles.
Gotcha.
More
Okay.
momentum. You see more of the momentum that way.
Oh, I'm sorry. To clarify, so you fib from the closing or the lowest wick of the opening candle
No,
right at 9:30 Eastern, or no?
no. You
Sorry.
fib from the open of the day back to the close.
Oh,
After the candle ends, so in other words, the 30 minutes are over. So for me, at 9 o'clock, you fib from the close of that candle.
okay.
Okay.
Close of the opening candle. Well, Eastern. Well, the market
The,
opens at 9:30 and it closes at 10. I mean,
for
that
you,
half an hour, right? Well, not
it
for me.
just
I'm Western.
time to. Oh, so it doesn't matter. Just the first 30
I'm just
minutes
saying.
after the bell.
Uh-huh. Okay.
After that candle closes, then you go to the close of that candle, whether up
Mm-hmm.
or down,
Mm-hmm.
and you fib it from there,
Mm-hmm. Okay, great.
and that will give
The
you your
close.
targets.
Okay, and not the lowest wick, but
No,
definitely the
the
close, right?
close.
Okay. Mm-hmm. Okay, thank you.
Okay, and then so let's see if I have this set up right now. Um, Yep. Okay, there it is. So, uh, and look where it hit. Perfectly hit our second target right here. Right. So if you're not playing, this is horizontal play, right? You got horizontal support and resistance, and then you have your um, vertical support and resistance lines, which I call, geez, really. Um, those are your wedges. Those are your channels and things of that nature. So if you're just playing strictly the fib strategy, you would have gotten out right there, right? You might have taken uh, 50% out when it hit the first target, and you let the other 50 come to here, or 80% out and just leave runners in, whatever. But you would have been out right here. Now, uh, what happens? Here's the 38.2, right? So all of these areas right here are dip buys, right? Your 50% to up to the 78%. These are your dip buys. So, and look where it came down to, exactly the 50%. That would have been a good dip buy right here, and we had a good rip. Um, and you're still doing that, and the 38.2 would be your stop loss. If you're hanging in through all this stuff with your runners, let's say you had your runners up here, they're coming down, you get out and you lost some money on those runners. Okay. But now when you have a close, not, the candle could be coming back down here and then come back up. So you have to let the candle close. It's just the way it is. But when it closes below the 38% line, then you refib. Okay, you refib from the line, not the candle, not the wick or anything, the 38.2 line, and you drag it up to the high of the day. Okay, and then the 161.8 will be your target. And so you could have gotten in right here at 431.65, and you could have went all the way down to 430, your target 430.37, and look at that. Don't tell me this fib strategy does not work. So
Oh, when you refib, can you clarify like where exactly do you start?
Alicia, yeah, from the 38.2% level
Mhm.
from the original fib, that is your trend change.
Mhm.
So you're bearish after this. Okay? So you fib back from the 38.2% line back to the previous high of the day.
Okay, thank you.
Mm-hmm. So when I had these levels up originally, see, then I went down to I scalped the 5 minute chart here, and we got up to here. That's where I took a lot of my position out, even though we were still above the trend line. Um, we broke back up, and then once we hit this right here at 11:45 or so, um, we were looking at, we noticed this head and shoulders right here. So you always, this is a part of your strategy too, is noticing trends. This is when I called out the inverse head and shoulder right here, right? And we drew the trend line up right here. And this was our target. And then when we had this dip right here, I just recalculated that right here. And that was our initial run up on the 5 minute chart. We hit the target, and then we're waiting to see what's going to happen right here. Okay, um, uh, these targets are support and resistance also, but about right here we're starting to look like we might just come back down to the dip buy area for it to go back up again, right? But that means instead of just waiting for it to come back down here to get in long, you look at what's going on here, and here's a big head and shoulders, right? So that was the time that we got into our next trade down, and again with the downtrend, I'm just in until we break the downtrend, right? And for the let's see here, I set a line right here. Carmen, you're gonna have to mute your mic. So right here I hedged, and I got I think I got 433s or 435s. I can't remember what the gamma was at that time. And so I hedged. But right here, we set in another head and shoulders, right? And big rushing star, that's very bullish. So while people are getting out right here, oh my gosh, I lost 200% or whatever, I'm adding to my position. Okay. And at the same time, I'm hedging just in case. Because why? If I average up right here and I'm adding to my bearish position, if this rips right here, see, then I'm really going to lose a lot of my profit. But if I have a good call, I think it was 433 target. I could get out of my puts, and I'm already making profit on those calls, right? So yes, usually that hedge move isn't gonna equal out probably the amount that you lost on your puts, but you're still increasing your profit by getting those hedges, and you're not losing as much profit in that. And then when it broke this trend line right here. Then okay, I lost a little bit. That was the one loss that I had for the day, but big deal, because it was just a hedge. And then this is where we came down here, and then I got out right here as it broke that top right there. And then
when you hedge, when you hedge, do you take buy the same amount of blocks as you do for the other way
No,
when you're not hedging? No. Okay.
no, because I'm still going against the trend, and when I hedge against the trend, I am pretty conservative with that.
Okay.
And then right here, we set this trend right here, bullish, and that's where I got into the 443s, made that big run, and now we hit this target. See, it's good to keep um, your original fib up because this still tends to be a magnet and a resistance. So let's see, where did we cross? Um, right here. So here was our second fib, okay. Um, and when we, especially when we broke this is trend change. Okay, now we're, if you were late to the game, I don't know where we were on. Let's see where this is. 1405. Okay, this was really tricky because this is the 30-minute chart. Okay, that this still finished under this. So inexperienced fib traders are like they're buying puts right here. They're averaging down on their puts because they're still underneath the reversal zone. And well, I take that back. This is from the bullish. Okay, so the reversal zone's up here for the bearish. So they were probably either waiting for the reversal zone, which is right here, and I know it's kind of confusing because I have the original fib up here. Okay, but usually what I do on the first fib is I'll put a price mark on it right here. I'll just like this. I'll add a drawing and put a price right here, so I know where that is, and then I'll get rid of that to clean up the chart. So here's the initial first fib target, and then here's the 38.2 bearish trend change. So if it broke above that, then we're bullish again. Okay. And at this point, I was thinking, well, this might be your late mega, bullish run for the day. But once we got rejected here, we're still bearish, and we had this beautiful head and shoulders pattern forming. And I made a judgment call. I thought, okay, this is going to be the high for this move right here. And that's when I got, instead of getting dailies, which boy, that would have been a massive move. But I ended up getting next Friday's 426s. They were at $1.29 right here. I think the low was 123, so I darn near hit it perfect. And I made, I don't know, 70%. What did it run up to here? But yeah, 70%. So I'm staying in them. I completely forgot about the 10% rule on the VIX. We did not have a bullish day today, so we got an 85% chance that Monday is going to be a bullish day, a bullish day. So I probably should have gotten out of these puts at the end of the day and made my 70% left. But that's just the way it is. So that's fib training. Now, this was an easy day for fibbing. We only did 3 fibs, right? We did the original fib down, and then you always do 2 because you have from the open to the close, and then you fib from the close of the first 30-minute candle back, right? So you'll always have 2. And then if it breaks that trend, which it did right here on the 30-minute chart, then that's your third fib right here. And yes, it does plenty of times when it's ranging these fibs aren't this big. Okay, this was a great day to be fib trading. But when you have your fibs, that's what I say. Even when you refib at the end of the second candle, right? Or at the end of the first candle, I'm sorry, the first 30-minute chart, and your fibs look like this, you're gonna have to you're gonna be and if it ranges that day, you could refib 7 times, you know. So that's where it's just you're better off just doing like a range square like this and just playing the tops and bottoms of the range. So, but this works great on gaps. You gap down or gap up, then the fibs are nice and big, and you can do quite well with it. I mean, just look how perfectly this played out. It hit right. That's the oh crap, level I call it. This is the 50% to 78%. This is your reversal, your dip buys, your bearish dip buys, and even if you got in, if you were kind of stupid aggressive, as soon as it got in here, you broke this. If you got puts here, you would have lost a crap load right here. But then boom, right? Um, I never get bearish again. The trend right here, my blue channel um, was bullish, so I waited, hit the top of that right there just perfectly, and it was the top of this channel, so we had a really good congruence or concurrence, head and shoulders, yeah, just easy play. What else, you guys? Any questions on that?
Oh, you said something about you were going to work on a scanner for us. Did you
Uh,
get a chance to?
yeah, not necessarily for you guys. Um, I was kind of explaining what I do, because I said I got to start looking for longer term plays again. Um, and
Okay.
if you have, um, it's gone. What happened to it? Oh, I didn't save it. So I scan with the deviations in here. Okay. Um, it didn't even save my thing here either. Okay, so now I got to come up here. Um, wow, this is touchy. There we go. Yep, it's not on here. Oh, come on. Oh boy, it's gonna be one of those days. I know I had them on here and it started with the D. Oh, this is
What are you looking for? A certain indicator or something?
no. Why didn't I save that? custom columns. I thought it automatically saved my last scan, but it didn't. Now I'm having a problem finding it. It's my deviation. Oh, maybe standard, bonehead. Standard deviation. There we go. Okay, so I could go and scan for anything that went to the fourth deviation. Okay, but I'm going to go from the daily chart and from the spot. Well, we'll go to the third deviation down. Okay, so I'll add that because on regular stocks they could go to the third, fourth deviation on the daily. All right. So, but we're going to go to the third deviation. I'm going to move that up here. And there it is right there. Okay. Now, so I don't have to do that ever again. Save scan query. Custom deviation scan to, I'm going to call it third deviation scan. And then it depending on your scan, you could go from $4 all the way to the max. You could add a filter, and we'll go. What I wanted to add one, whatever. Boy, you could tell it's been a while since I set up a scan. We'll move up the volume to, let's say, 100,000. 120 for right now, big deal. Okay, and now I want to add another filter, stock. Why is it only allowing, why is it doing that to me? I want to add one. Interesting. Well, this stuff always happens live for some reason. Volume. I'm not going to hit add filter again because obviously I can't. Maybe it can. I'll just leave it at that. So, and then we just scan. Okay, now this is what I used to do all the time for long-term plays. All right. And then I'll look at the thing that I want to look at is the ones that are green. So this is like 2.4. So this is getting close to the bottom. So it's green. So that kind of means you're bullish on it. So that's ATEC. So I come to ATEC, go to the daily because that's what I scanned for. Okay, so ATEC, I'll put my deviations on just to show you how cool this is. I want to make sure that's on the daily chart. That's interesting. Wow, I could really tell I'm out of it here. Well, I'll mess around with this later. My whole point was is to show you how I start to find stocks according to your strategy when the 20 is below the 50 or something like that. Okay, and I'll go through all of these stocks, and I'll quickly, now here's the deviations, and if you notice, here's the first, here's the second, and here's the third deviation. Okay, we're getting down 1, 2, Here's the third deviation right here. So can it go down to the fourth? Yes, it can. Everything is in a downtrend, right? We had a big squeeze right here, and now we're having a rundown. Now we're not, going by, market structure. We'd still be bearish here, but this is something that I might be looking at because we are that far down, and now I might put this on my watch list to see if the slow starts to break to the north side. We are the CCI though is just kind of sitting there. It's not in extremes yet. But then this is something that I'd be looking at. I might put a trend line on here for. This is the 15-minute mark. So we definitely have a lower low, a lower high, lower low. Okay, so now in order to mitigate, we gotta come back above 1368, right? So I'm just trying to trend line on here, right here, and I could put an alert, create an alert when it crosses above, create. Okay, so this could keep tanking, but when it breaks, then I'll get an alert out on it, and I'll take a look and see where we're at. Maybe we come all the way down to this liquidity right here, okay, and then we break above. Well, now I don't have to look at the stock at all, not at all, until it crosses this, and then wherever it crosses, then I'll look and go, hey, this looks pretty good. And that's usually on my Ronbo's ideas. I start throwing out ideas for I don't care about what happens on the 15-minute, none of that stuff. I get into good, solid, long-term plays. And how you find that is on the daily or especially on the weekly. So that's the general idea. And what because people ask me all the time, how do you find these, long-term, they just rip, in a year, they go up 300%, 800%. AR was, 900 and some percent in a year and a half. And this is basically how I do it. It's just about that simple. And then I just do my rules, right? That I'm not too thrilled about this one right here, to tell you the truth. I'm looking for the ones I love the most are the banana peels, right? And if you look at my my idea thread, I look for a trend line like this, except on the daily it'd be coming like this, and then you draw your support lines where it's really steep, right? So this is pretty like this. It's pretty steep, and then as the support starts to come in like this. Okay, that's what you want to see, because then it breaks the trend line. We have a big run up, and then it comes down and retests, and then once it sets that trend line and it's going up, now you don't want a super steep one, because then fast up, fast down. I'm looking for a good 20 to 45% line right here, and there's my entry point right there. And now this would be on the daily chart, or even better, the weekly chart, right? So then you're just, then it's doing one of these things over a year, not a couple days. And those are really good ones. Ari, you get charged, all the people in Canada get charged per trade. Well, heck, you could get into a trade like that. You put in a certain amount of money you don't care about. Now, what I mean by that is, you um, you don't have to, you're not going to miss putting $300 in something, and not pay attention to it for a year, right? Or 6 months, however long the trade allows you to stay in it. Um, then you're just looking at that once a week, once a day, um, and just watch your $300 turn into $900 in a year. Now you're like, well, man, that $300 is only $900. Well, again, if you're not paying attention to it, and you're doing your scalps and your day trades and stuff like that, a year later, that $300 that you just forgot about is now $900, right? Or $3,000 turns into $9,000. That's how you grow wealth. And this is very, very, very important. I have quite a few long-term trades that I'm still in. So as I'm making money day to day, day trading and stuff like that, people are like, "That's all you do," and I'm like, "No." Saturday when I get off of here, I'm going to be, I'll go through the scan that I have, um, and looking for things. Now, obviously, I don't do that every Saturday, but I haven't done it for the whole summer actually. But I'm getting the itch to start looking for some longer term trades again, because October is usually the turnaround. In November, we have a good uptick. So I'm looking for stocks that are going down. So that's how I do it. And then I'll just go through, what do I have, 100 of them? I could go through 100 in 10 minutes. I'll just set this to send this to a watch list, connect the watch list to my main chart right here, and then I could just go through it. Like here, I'll use this watch list right here, my index watch list. So I could, and then when I'm there, boom, good. No, that's bad. No, that's because I just, I've been doing this for so long. I could look at, especially on the daily chart, and I'm just like, no, no, no. And all I'm doing is looking for that banana peel. Oh, look at the VIX, right? So let's say this is whatever, not the VIX, but just whatever chart as I'm going through my scans. And then I'm like, okay, the support was there. Now it got a little steep again right here. And now we're right here, right? And here's the downtrend. Obviously, I have my lines drawn on the VIX because I play it, but this is getting to a point where now I'll start. I believe the VIX is going to start turning up. So, but I'm not bullish on it until we break this, right? So this is still scalping territory. When you're below any chart that you're in, if you're below that, if you get an uptrend, right, is remember it's the bearish plays are bigger than the bullish plays because you're under the downtrend. So you have to be pretty conservative, right? And playing horizontal support resistance and things like that, as long as you're below here. But once we break this, like let's say here's the bottom of the chart, and we break above, then you'll get your pullback, and you set your trend, and that's how I look for those banana peel plays on my scan list. That's what I'm looking for.
I'm sorry, can you explain banana peel? I guess I missed that. What that means?
I was wondering the same thing.
It looks like a banana, not a banana peel, right? You know what a banana looks like, right? It's just
Oh, okay. I see what you're talking about.
right. So
It's an
so the
eggplant.
here's the downtrend. Quit. So you'd have your downtrend is really steep, and then it gets less steep, and then it gets less steep, and then it's better to have a flat line first, and then it starts going up, and then it breaks the downtrend. See, I don't care. Everybody, oh, look how low it is. We're right here. Well, again, scalping area right here. That's all that this is. Until it breaks that downtrend right here, I don't care what happens here. I might trade if we get an uptrend right here, and a lot of times with the penny stocks, like I said, the trend line gets steeper and steeper really quick, and especially if you're under a downtrend, and everyone's going, oh, it's going to $2 and it's at 10 cents right now. They're talking that stuff. I'm like, this is in a downtrend. We're not going to $2. And then it goes down, right? And then we set a higher trend. I'm like, okay. And then what happens right here? See, that sets a bullish downward wedge. So in this area, I'm just scalping. Okay, if I'm doing that on a stock, and but then we break. Okay, and I don't care about horizontal support levels at that point. I'm waiting for a good 30 to 50% drop in price after we break that. Okay, because in a descending wedge, typically what happens is after it breaks out, it tries to what we call meet the point. So here's the point right here. Most of the time you'll get around a 30% drop. So it's trying to come back down to the point right here. And then you'll get your move. Okay. Sometimes it does come all the way down to the point level, but usually it doesn't. But you got to watch the market structure. Be careful. Wait for a higher high, higher low, higher high, higher low. Boom, you're in, and bam, you're gone. Right?
Some of your recent examples on your uh, ideas was TGTX
Yep.
and JMIA or
Yeah, Jamia.
Jamia.
Yeah. TGTX.
If you wanted to pull up like a banana example.
Yeah, I was thinking I was going to do that. Now, this was from the weekly. Okay, look at that. I started telling people at around around $5. And then it breaks, and there's the dip, rip. Beautiful. And I called out 35.94 from $4.78.
So you basically have to wait till it plays out, though. I mean, it's not like a 1 day trade; it's a longer trade.
This took
Right.
200. This took 203 days.
Oh, okay.
Okay, but while all the microscopers are hammering away, looking at the monitors all day long, sweating every single candle, I looked at this chart once a week. Right, so whatever that is, 7 into 200, right? So I looked at this chart 7 times.
But when did you get in, or earlier on?
I got in at like 480 or something like that.
Like what part of the banana did you get in?
I got in when it hit this downtrend right here, and this was the scalp area. But this week it broke. And then I'm like, well, this is just going to retrace. I added more at around 7:30, and that's when I set um, uh, these levels right here. Okay, because now there's more to it. Because if you look at my posts, um, this was a pretty decent cup and handle forming. See, this is what happens when you have a steep downtrend, and you have the banana peel. See, or the banana is forming a rounded bottom, which gives leeway to a rounded coming up top, which then gives you a cup and handle scenario, which gives you massive moves. Okay, so then I gave horizontal support or in resistance. Here was one, and if you look, I said this is a target. It could just be done right here. Okay, but when we got up close to this support right here, see what this is? This is a cup and handle within a cup and handle within a cup and handle. So that's why I said that this has a good chance of going to 35.94, 56.50, all the way down from down, at $4 or whatever that was, 486. And it hit this was my first target. I think back then I said too, I gave out targets at 20.54. If it gets above that, it will go to 35.94, and it did. Exactly. Okay. So that was 500%. So, a lot of, to finish my story, a lot of, you're sitting there looking at the monitor all day long. In 280 days, how many people's profiles went up, that much, or if their overall P&L in 200 days went up 500%, right? So just one simple trade, 500% in 200 days. You got,
Do you do the mitigation at all too?
well, yes, you could go mitigate, and the thing is, though, when you're looking at patterns, like that, this formed a cup right here from here. So then I'm just looking at percentages, and if you notice, we this did mitigate right here from this low, but one candle really does make a difference. So this tends to give you momentum plays to where market structure you want to pay attention to at the same time. But this is just a dip to form the handle to make the bigger cup and handle. And right here, remember, I said, okay, this is the plan. 38% down from this move right here is the bottom to form your traditional cup and handle. So I was warning people, if it breaks 24, the 30% was right here. So if it went below this bigger cup and handle right here isn't going to work. And look what happened. Boom. Right. So, but then I told people, okay, we have this trend line still. So the big momentum move is gone. But this still might be a really good long-term play if, when it came down here, I said, this is a great time to get into it. Why? Small risk, big reward. But it broke through. And we're still underneath this downtrend that I set in April. So that's why I always say, if it's under a downtrend, consider it going to zero. And you don't, oh, we're going to go, and right here, and I said, no, we broke below this, the cup and handle's done. This one worked out, this one didn't. And so now you're still keeping an eye out on it for a good long-term run, right? But now it broke below. So, but now, Granny, get back to your point with market structure and why it's always the most important thing, right? Is because here's your high, here's your low, high. Just in order to keep going higher, it's got to mitigate this. So this is your what they call point of interest. It's got to come back down and break below that. It doesn't care about cup and handles or anything like that. But this is good to know, because you start coming down, you're like, market structure says we got to come back down to here. So that tells you that this bigger cup and handle isn't going to work. That's too big of a dip. And what happened? It mitigated. Now this one mitigated, right? It came up, it broke back down, and came back below that high. So boom. But this one, this high right here, didn't mitigate, right? So here's your oh gee, really. So when it dipped and came back above right away, I'm going, this zone has to be mitigated. It has to. And sure enough, boom. Once we broke this right here, boom. And now we're ranging here, but now all this has been mitigated, but we'll see what happens to it. I personally hope that wherever this bottoms out, right? Let's say it keeps coming down here and then bottoms out right here. Well, then remember what I said for long-term plays? I want a nice, easy, low trend line. Why? Because right here, this was nice and easy, and then okay. So steepier trend lines is called fanning, right? Is here, is there, and then boom, it's up here. It's fanning upwards, which means you better start taking profits, because there's going to be a big move down. Now that obviously there's nothing wrong with playing this, but then you want to, once that started getting steep like that, I drew a trend line. I got out right here at like $32. And then I was waiting for, like I was talking to Moon about it, I was waiting to see if it bottomed out right here. This was close enough to where I said it could still work. But then we had these days, and I'm like, nah, it's over. So, and because the market structure demanded it was going to come down here at just like a gap. It's actually mitigation gap. So eventually it has to be filled. Now sometimes months comes up here, and then it's like, hello, remember me down here? Oh yeah, I'll come down and get you. Right? And that's what happens. So that was a great.
I just.
Huh?
No, sorry, not to interrupt you, but I know how I was kind of just trying to observe how you found these stocks using the scanner. You inserted standard deviation like 2, 3, and 4. Are those already in Thinkorswim, or is that something that's customized?
There is, yeah, that's a custom one, but they do have standard deviation, or your standard error, I like too, but they do have standard deviation channels right here.
Okay.
Here, I'll put it on here and just give you a sense of what it looks like. So now with this, you could customize it, and the deviations right here are only 0.5. So if you want, you could go to 2.0. And it's so low right now, I don't know where it is. Okay, here's your second deviation, midline, lower line. Okay, so it does have the midline is, oh, it's black right now. I don't want that. So let's see where this is so I could find it. Okay, here's the standard deviation, or the average, the means as we call it. This is this is 2 deviations down. And I think the other one, the upper line is black. That's kind of silly. Let's just make it purple. There you go. So here's your standard, and see how once it gets up to the second standard deviation, it wants to come back down to the average price. And here's your second deviation down. So we still got a while to go. Now remember that this, is upticking, so it's still going up. So maybe in November it hits $8, and then we might be working our way back up to, whatever, maybe.
Right.
Right. So if you're bearish, you could get scans. So yes, if it's a study on Thinkorswim, you can scan for a second deviation. Second deviation up, second deviation down.
So it'll just show us stocks that are in sort of out of bounds or extreme positions, and they all tend to go towards the mean, the medium.
Yep.
Right? Okay.
That's why that's the means, because it's the average price.
Mm-hmm. What about Bollinger Bands? Does it do something similar? And have you used them? Do you like that?
I don't care for what Bollinger's, because it's a moving average, and you have the deviation off the moving average that you set it to. You could set the Bollinger Band set to the 20 moving average, the 50, the 20 EMA. Right. Okay.
Mm-hmm.
But the general standard moving average, that just is a straight line.
Mm-hmm.
Okay. Now it moves, is still dynamic, but Bollinger Bands are more for, if you want to scalp, then you'll do like the 20 EMA or something like that. And then those deviations are just like 2 deviations away from that moving average. So.
Mm-hmm. Mm-hmm. Right. And this this median line, is it how is it calculated? Is it a MA or EMA?
It's calculated by the all the stock opens and closes. So that's why it's just a straight line. And if the stock is going up, and that's another good thing that you could use for an indication. Now mine is a little bit more complex. This is the daily, and if you notice, see, it moves. Okay, here's the median. So on the other the default thinkorswim deviation lines, they'll be looking straight like this. They'll be going, just all the lines will be straight, and then you don't notice it, but they slowly start flattening out, and then all of a sudden now when you look at the deviation, from July, the deviations are going down on your chart. So they do move, but the beauty of this one is I could see the moves in history of where the deviations were. Where on the default, you don't have that. Okay.
And yeah, I'm sorry. And all these lines, purple, gray, light blue, how do we read those, or what does it mean?
There's the different deviations. So the white is the average price. The gray lines are half deviations. So this is a half deviation away from the average. Then you have the orange. That's one deviation up. Here's one deviation down. Another gray line, because that's the 1.5. The green is 2, 2.5. Aqua is 3. Purple is 4.
So ideal for daily, uh, I guess daily charts is the second and third, you would say?
Well, okay,
The,
going by indices like the SPY. Now, if you notice, see, here's the SPY and the weekly. Now, on the weekly, I just have, but they're just straight. Okay.
right.
So right now, look where we were at. 1.5 dev up. It rarely goes above 1. Right. So
Okay.
your standard is right here. And if you go by deviations, I wonder if I have that on here. It would explain it a little bit better. I know I had it in my email that I wanted to have it in here. Well, I'll just look it up real quick. Because it will help you guys understand standard deviation. And I can't do that. So no matter what it is, the height of the American male, woman, the how many years people stay in school, no matter what it is, it always looks like this. Now year after year, it's going to sway a little bit this way and a little bit that way. But your first deviation from the means, this is your average price, right? The first deviation down, first deviation up, it's going to stay within this range 68% of the time. And then within the second deviation, 97% of the time, or 95%. Third deviation, 97%. Right? So the average male is, I don't know what, 5'7", something like that. And your fourth deviation, he's like 8'3", and there's like 2 people in the United States that, and then vice versa. There's some guys that are only 3'8". Right?
Is it same principles as just like the bell curve kind of thing?
Yeah, that's exactly. It's a bell curve based on a mathematical equation. I think it's sigma equals the square root of sigma something. I can't remember what it is. But so you just apply that to the chart and think about it. right? So 68% of the time it stays within this range. Now
Right.
it's been going down. So if you're way up here, right, 95% of the time it's not going to go past the second sigma. So
Right. Right.
what should you be doing right here? Getting puts.
Absolutely.
So scan for now stocks that are under the second deviation or maybe even the third, because the now TG didn't go underneath the second sigma, but on the weekly, but um, I'll bet you because that big drop down on the daily, it's hard to see here, but look at how close we got from the fourth deviation right here. And all of a sudden, boom, it hit the second. Now it hit the third. But you're like, well, how did it go from the fourth to the third to the second, and it's just horizontal? Because you're in a bearish market, and see how these lines move? They're stair stepping down. That's
Right.
because the deviation does move. You just don't see it like you do with that default. The default, no matter what, this is my weekly chart, but on your 15-minute chart, it's going to look like this, right? But now on like the 5-minute chart, you might start the day and the deviations are going down, but an hour later, all of a sudden they're going sideways, and then an hour later they're starting to go slightly up. So it's a little tricky because that way, when they were going down, and this was at whatever deviation, maybe the second deviation up right here, and you're like, oh, now it's going to go down, but then it starts doing this and comes up, and then the lines change, and you look at it at the end of the day, and that was in a completely different deviation area. It wasn't the first deviation up. It might even be the first deviation down. So that's where it gets a little tricky. And farther out you go, obviously less it moves. But this is what I call it. This is the dumb money, the first sigma right here. 68%. Look at all the action. It's all in here. That funny fourth deviation, 99.9% of the time it's not going to get above that. And boom, it didn't. Good time to get puts right there.
Oh, so how do we play more with, I mean, trade with smart money rather than dumb money?
A lot of patience. A lot of patience waiting to. Now, regular stocks, especially the blue chips, they move more like the indices. If it's, at 1 sigma up, you get puts. Wait till 1 sigma down, you get calls. You get puts right there. Oh, crap, you get stopped out. Oh, look, and then you just wait. You wait for a downward move. Oh my gosh, it's up here. I'm loading up on puts. Boom.
That makes total sense.
Yep. But it takes a long that most people don't, especially younger people and newer traders, they don't have the patience to do that. Why? Because around, I don't know, 80% it stays within the half deviation range, right? So now this is the weekly, or this is the monthly. Oh my goodness. So on TGTX, you were bearish here, um, and from here, August of 2015, you waited to be uh, bullish 2 years later, year and a half later, right? So, and then when it hit the first sigma down, look at this right here. You're in at $3.83 at on the 2018, and you get out of it 2006 on 2021, 3 years later.
What's the best strategy to play something like this then? I mean, maybe set alerts or do scanners often and then
Yeah,
get in.
that's what I was just talking about, how I find my long-term trades. I'll do a scan. Now, you can go down to maybe the 4 hour, if you get a little buggy on it, but I typically like to do the 1 day and the weekly for really long, 3, 4, 5 year plays. Um, but the daily, um, I that's how I found AR. Uh, can't see it on the daily now. It's been too long. But on the weekly, I was in right here, $4.49. And if you don't believe me, go back and look at the thread. I cried and cried. People get into this. This is a great long term play. A couple people listened to me. Then I again on this dip right here, I told people get into this at around 11. I said it was going to go to the 40s or 50s, and they're like, yeah, 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 and they forgot about it. And I got in right here at $4.49,
Wow,
and I played it all the
that's
way up.
amazing.
I played it up to $47.
Oh
I
my gosh.
I scalped it a couple times. I got out here, I got back in, got out here, got back in. Right here, I scalped. But from down here, I literally looked at this once a week.
Mm-hmm.
Easy.
Wow. And, and what was the initial sign that made you go, wow, this is going to be an incredible play?
It started at literally as a 1 month swing because AR on the, I think it was the 1 hour chart. Now, my back then we didn't have that awesome script now that we have. Now we just have. Back then we just had these, like I said before, on every single chart. They were all straight like this. But on my scanner, it went down to the negative 2 sigma. So it went down here, and I'm like, oh, this the deviations were going up. So you want to pay attention. It's kind of like an indicator. If your deviations are going up and you're at the negative 2 sigma, I'm in. And I was watching it and was doing this all the time. It was a money making machine on the smaller chart, and it was doing like it was looking like this, right? I was watching it. I think it was around $3.20 or something like that. And now this is the weekly, so I was watching it a couple weeks, right? And I went back and it was just the deviations were up like this and was just up, down, up, down, up, down, just going up. So that's when I got in right here. And then I started looking at the larger chart. right? So because I got so fixated on it, I forgot the number one rule. Go back and look at the monthly chart and the weekly chart for your longer trades. I just got so fixated on it. I was making so much money on the Sigma moves. And then it finally dawned on me, you idiot, you didn't look at the weekly chart, you bonehead, or the monthly. Because I was thinking about getting out, when it got up to here, I was stinking up 200%. And so then I'm like, well, Ron, look at the monthly. And I looked at the monthly and I'm like, holy crap. And this is when I started begging people to get into this because I saw, look at this banana right here.
Yeah.
That's your banana. And we
So
still,
bananas turn into cups.
it has the potential to turn into a cup, yes. Okay. So, but now if you look at the monthly, this is going down. So, but on the weekly, I mean, I was just like, this is going to be a cup and handle, and this is too small of a target for this. See, this is momentum. You drop. Think of it as a ball. You drop a ball, and it starts rolling and starts getting really fast. So this wasn't going to stop it right here. So here's my target right here. This resistance right here, and sure enough, boom.
Wow.
Big plays, guys. On the you want big plays that you could just sleep easy at night and look at it once a week.
Oh my God. The ones that you don't have to babysit, I love those.
Yeah.
Yeah.
Well,
Absolutely.
if you plan on something on the minute chart, you got to look at it every minute. If you plan something on the weekly chart, you got to look at it once a week. Right? And then the big time, the institutions, they're looking at the monthlies. Right? So, yeah.
Well, sorry. What would it take for those deviations in a downtrend right now to switch on the upward way? Like, would you need to break your previous high, have a higher low, and then a higher high, and then they might uptick, or?
It's the average price overall. So this has been up since, it's up. What I mean by up, this is still up, right? Comparable
Yes.
to down here. So
Yes.
it's averaging a lot higher up here. Now the average is starting to lower a little bit, but this is the monthly chart. This will take another 2 years for this to even out, let alone starting to go up. This will take a while.
Okay.
Ronbo, quick question for you. Could you look at a chart for me?
One more thing. See, look at the weeklies, though. This is the weekly chart, and look, we're going up.
Yeah, they're up, yeah.
Yeah. So, okay, just 1 second, guys.
Yep.
All right.
All right. Could you possibly look at Lucid for me?
Oh, okay.
This is Juice, by the way.
Oh, hey,
Good
Juice.
morning. Hope everything's going great.
Doing well. Yeah, one more thing, like right here on the weeklies, you notice look how it turned up above. Why? Because it hit the first deviation down. So people were betting that this was going to be going back up. But like I say about trading in a vacuum, um, when people are all excited and they're like on the 1 minute chart, and I'm looking at it from the daily and going, this is going down, and they're like, what do you mean? Same thing here. Even on the weekly chart. Oh, here we go. We're going back to the average, but they're not looking at the monthly, where we were way up here, and we might be coming all the way back down to this deviation down here, right? So, okay, Lucid, what's that? LCID, right? Yeah.
Yeah.
Well, speaking of deviations, the monthly, we're going down month by month. Weekly, even on the weekly, we're going down. We're getting some support right here, but yeah, it's not looking great. I do have the money line is way up here. It's at 2004, and it's still going down. So, I'm
not bullish at all. I got puts. So.
Oh, well, okay, then you should be doing all right. How far out?
I got them a couple months out from now. I think around 5, and then 4. Just to never know. It's just been going down the whole time. Doesn't look great to me.
No. On the weekly here, for right now,
Looks like a pretty decent banana peel.
it's
If it holds.
It's all right. So, but the thing is, it's still, the support is going down. Even right here, we're in a downtrend. I think you'll be just fine for a couple months, but you'll want to be probably starting to just be careful. The average is be down here, I mean, around the, I don't know, $5-6 range, maybe by the end of the year. If it starts to break above that, then we might be coming down up to, the $15 range or so, maybe. But from the weeklies, I would start drawing supports, because it's definitely, see here, here's how steep it was. So the support is starting to shallow out, which is the beginning of eventually some kind of upturn. But this is the weekly chart. So I mean, here's 2024 right here. So you got a while yet. So you should be all right.
All right, thank you. And have you looked at cruise lines lately?
Not at all.
At all?
Like I said before, I gotta start getting into scans again, because of I haven't done it for a while. My long-term plays are doing well, and I kind of got lazy on that. So let's see. I want to look at the daily chart here real quick.
Are they doing well? Despite how August, September, like usually always has a major correction, which it's doing this year too.
It does on, but you got to remember, just because the market overall is going down, that doesn't mean that right? You have different indices in here. So you have your inform just because everything's mostly going down. You have like materials might be going up. Consumer discretionary has been doing well lately. Staples. Okay, so uh, just because the market more or less is going down, you have to remember seasonality, and that changes, especially for something that's really dependent on seasons, which your cruise liners are. Um, so uh,
They look horrible, by the way. Like I'm thinking about getting puts, but I'm not. You've turned me into quite a bear. I'm not like perma bear, but it's like it's not that easy going long. It's
it
definitely easier
it is
being a bear.
easier. It's easier being a bear, but you want to be a bear in a bearish market, and you want to be a bull in a bullish market. That let the market dictate what you are. That's why every
Yeah,
single week. That's why every single week I do my copper, my dollar, high yield gains, the industrials, the New York Stock Exchange, because that's telling me, okay, I'm gonna start being bullish. Like I said in March, I was bearish, bearish, bearish until March, and I'm like, okay, we're bullish now. So that's when we want to get more bullish, going bullish than bearish. But it's so tempting because the thing is, the market, just like anything else, politics, it fears the news. Fear um, motivates people more than positivity, or right. Um, what do you call that?
the
Optimism.
whole yelling fire in a building and everyone's running out, or being a motivational speaker. I'll always remember that one.
Yeah, it's that's just the way it is, right? You have, even in politics, you have one side that's optimism about the country and love for the country and positivity, and you have the other one screaming hellfire and fear, and the world's gonna fry up next year, and um, one motivates more than the other. And it's just the way things are.
It seems like panic selling goes faster than
Yes.
Mm,
yeah,
Yes.
optimism.
yeah,
Yep.
it's way better.
The
But if you're
moves
playing it that way,
the moves are usually much more aggressive on the downturn. Boom. You
Morning,
just
Ronbo.
it is.
is that
Hello.
Pebbles?
Hi. What are you doing on Voice Juice?
You
Is that
like
juice?
that? Eh? I'm just checking it with my guy Rombo. It's been a minute.
So, um,
This recording live, guys, on YouTube too.
yeah. So, uh,
Oh,
yeah. So
let me
small
not say
chat.
anything.
Yeah. You could no ask questions. That's what this is all about. So what were you looking at? Which cruise liner?
NCLH.
Good old Norwegian. Oh, I wish
I
you
have
were in
played that
this
one
back here.
several
I
times.
know, Rombo. I know. I'm upset myself. Look at that thing. Waiting for a retest.
Boy, I got to go back to the weekly on this even. Okay. Um, okay, change of structure right here. So that mitigated. It didn't. This didn't mitigate, but so this was all inducement right here. That's why. So this got all the bulls out. But right here, that should have been your target. Uh, this should have been your target right here when it was down here. But now this move was mitigated though, so you got to be careful. You got to be careful here because we're putting in higher highs and higher lows, right? But the way this is looking right now, here's my downtrend line. I should change the color, but here's the downtrend line. So we haven't set a lower high yet. So yeah, you kind of you're right in the middle of the range. I wouldn't do anything right now.
Yeah, I'm
Sorry,
just watching it for now.
I it's too late. Right here. Crap! I
Hmm.
wish you asked me that a couple months ago. Holy crap! We would have been millionaires right here on that.
I was talking to Breezy about this a couple months ago and kind of forgot about it, and then someone brought it up to me, and I just went, let me check it out, and yeah, here we are.
Yeah, because it didn't have to come down to here, but this would have been my target. Well, actually, yeah, this is all pretty tough. Here's, believe it or not, here's the point of interest right here. Okay, so if it wants to continue the downward move, see, here's your trading range. Right here on the weekly chart, this is your trading range. Right? This is the last move that broke that previous low. So here's your point of interest high. Here's the point of interest low. So all of this is just liquidity. That's all it is. They're building up on the weekly chart, just a lot of liquidity right here. So you don't want to be liquidity. So you have to be really patient on this to make a bigger move. I would either wait for a bounce here and maybe get calls, and be careful of this downtrend line. And I would just be scalping this until it either breaks this downtrend here, and then this would be actually, yeah, this is the point of interest, and this one also right here. If we set a lower or a higher low, then I'd be very bullish on this actually. But if we break down here, then if we break below this trend, then I might be going down to this point of interest down here and looking for maybe a double bottom and then coming up something like that. I want to take a look at this real quick on the deviations here.
What's also interesting is before you deleted that trend line going up, it was projected to bounce off that trend line around March, which is also right in the prime of where cruise lines start to hit as well.
Yeah. 1, 2, look at that. 2.5 deviations up. Back here, 2.5 deviations. Just about 2.5 oh my goodness. And then a big massive divergence pattern on the MACD. I don't have the MACD down here, but this is based off the MACD. This, oh God, everything was screaming just a massive move down.
I know. I'm sorry I didn't talk about this.
Yeah, if any of you guys, if you have, well, again, that's what Saturdays are for too, to ask about stocks, not, oh, what happened, but, oh, hey, I heard about, I think this is going to be going down. I mean, we want to do this before the fact, so I find it up here or down here, right? I've called out plenty of massive movers from people on Saturdays asking me to look at a stock, and I'm like, holy crap, this should be going down or this is going to be going up. But
Ronbo, when
so
you
right
do
now,
find,
just a minute.
oh,
So right now we're just about at 1 deviation down, right? But we were 2.5 up. Oh boy, but there is a lot of support here off the -1 deviation. And what's scary is the deviations on the daily chart are going sideways. Um, so yeah, this is tricky. They'll be fighting at the 1548. If it breaks below that, you might get puts down to 1435. But the going by the dailies, this is uh, you might have caught the low right here, and but there's really no liquidity grab till down here. So um, that's my idea on that from the weekly. I want or the monthly. Oh geez, even yeah. Strictly horizontally, it hit here, and yeah, we should be coming down to 1335 or so.
Hmm.
And then what that will do, again, like I said on the other chart, is you have this high, this low, this high, and if we want to go farther up, we have to mitigate that, which we did. So this is kind of a scary uh, area here. So that move was mitigated. And this was just a double top, so it mitigated obviously, and then on a double top, and then we broke. So we're starting a bullish pattern here. So if we, and here this blue dotted line is the lowest candle on the chart, major VWAP here. So if now this is the weekly, so it's going to take maybe a month or 3 weeks. If we hold above 1477, this is, see, it dipped below it though, but it's respecting it for the most part. So we could come down a little bit below here, but if we start pulling back up again, I would actually be getting calls. It just sucks.
What's that purple? The purple dotted line?
That's the VWAP, that anchored VWAP that's anchored to the lowest candle on the chart.
Okay, thank you.
Okay. Now overall, again, here's our trading. Here's the trading range from here down to here. So let's see, down here, up, down. See how that mitigated this move. So, and then we came.
You want out, buddy? You want out? Come on, let's go. Come on, let's go. Come on. Come on.
Yeah. Let the cat out. So this whole move is fine. Everything's mitigated, not telling us that I'm looking for something unmitigated up here to give us a point of interest, but there isn't any. So this could just be all inducement for the next move down. But for right now, we do have higher highs, higher lows. So this could be a change for them. Yeah, even on the monthlies, gee, this is just looking not too good.
Do you think like CCL, Carnival Cruise Line, would be the same or similar, because it's also a
I was
cruise?
looking at that too.
Yeah, and seasonality, like in general, like summers, they're gonna have more, better sales revenue versus winter.
So CCL looks um, looks better, but here we got down to the second sigma down, and that was it. A lot of a lot of fighting at the negative 1.5 deviation, and we're right here. And now we busted up to the -1 deviation. And like I said, we were 2.5 up, so this could uh, 2.5. We can't get down there because that's negative. So I would probably start to look at horizontal areas right here. Yeah, we could easily be coming. We broke the money line. We came back down. We're under the money line. I wouldn't be bullish on this until we break 1581. So it's
Ronbo,
possible.
how well can you look in, or how much should you put into the full charts looking this far back when, you had COVID and these ships went, basically silent where they weren't producing any revenue and going into massive debt? Should you still respect the chart in that
Yep.
sense when these major
That's
things happen like that?
number one rule: respect the chart. I don't care about what happened. Nuclear holocaust, nuclear holocaust. I don't care, whatever. Things are gonna, go down so far.
So
Because who sets it, right? Bank of America, everybody, deviations. Go look at their charts. Everything is you'll see based on standard deviation.
right.
That's what they go by. Here's the .com bubble, half deviation down. Not a coincidence. Boom, 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 boom. We just about came down here. One deviation down on the monthly chart. It again 95% of the time it's not going to go under the -1 deviation. 95% of the time it's not going to go above. There's your 5% right there. And that right there is where I called this move. Right there, I called it. I called that from the weekly chart. There it is. Second sigma up. I said we're coming back down to the average price, which at the time was 410, and everybody laughed at me. It's not going down 70 points. There it is right there. And then right here, that's where I told you I was extremely bullish or bearish. And I said we were coming down to the 352 area. No way, are you kidding me? That's another 68 68 points. Yep, boink. There it is.
So there's another one that's kind of like, the cruise lines that I've talked to you slightly about, Rombo, but it's made big moves recently. Like I'm 400% on my puts is Delta Airlines. And I'm trying to figure out because it's going to reverse back up. It went up to it's DAL.
Oh, D what?
DAL.
DL. Oh yeah. Okay. So
And I know it's going to reverse back up and probably go back up to the 50s plus once it finds its base. And I thought 38 may hold, but I'm banking on 36 area. 30. What do I have charted out? 35, like 40 something. And then I see it going back to the 50s.
so if I continue this price out and this downtrend right here, we're looking at 36.
Mm-hmm. 36 was where I had it. 36 was just my flat line.
Now the thing is, here's the lowest candle on the chart. Here's the lowest candle on the chart, anchored VWAP. All right, so here's the money line, and it broke through the money line, but funny, look where it stopped right there. So if it breaks down this week, at the end of this week, wait for the candle to finish. If it finishes under 37.37, you're looking. So this was a liquidity grab right here, market structure wise. We came up above. This is your target. This would be. This is your point of interest right here, 27.31.
Can you throw up the on? This is probably the same thing as your deviation. Half deviate the ones where you have your bunch of dotted lines, but I guess that's the same thing as what you got up, just in a different format.
The I think. What do you mean different format?
You know how you have all the dotted lines going across, and there is your deviations are showing, not your money lines and your anchored VWAPs and stuff, but the
Just different time frame.
Yeah, this is the weekly.
Yeah, I see. Okay, yeah, makes sense. Yeah, that was it.
Yeah, this is, so here's the pinch right here, and so there's the big move. The deviations are just now starting to go down. Okay, but so on the daily, I mean, this went up three deviations up. So guess what? Most likely, 3 deviations down. That's 32. Right now is 32.
You say most likely. It's kind of like a rubber band. Like if it goes really extreme, it'll just like bounce back to the other extreme the other way. Is that how you see it?
Well, when you have an extreme move up away from the average price, you're going to get a balance. So you'll usually get it about the same on the way down.
Okay, cool. Thank you.
There's 3 deviations down, 3 deviations up. You might look at it that way. 2 up, just about 2. There's 2 down right here. 3 up, maybe 3 down. But you want to look at major deviations that act as support. So here's.
Hey, chill out.
Here's your.
You're not feeling well. You got diarrhea and you're puking. Just lay down. Take a load off.
Rich.
Relax.
Rich.
Oh, it's not me.
Oh, sorry.
Yeah, we're live here, so.
I didn't know my speaker was on. I'm sorry.
All right. That's it. Yeah, so Delta. Oh, I didn't see this though. Now we do have a divergence pattern forming on the MACD. That doesn't mean right now this could just keep drawing. This could keep drawing this line, bigger, and longer. But it's saying it's forming a deviation here, so you want to be careful about that.
I'll keep holding my puts.
Yeah.
Ronbo, can you look at UBS? I bought that based on news, which was terrible. They had news that they were gonna, because they bought Credit Suisse, and I think they bought it for really cheap, and so they made lots of good revenue on it. But yeah, it hasn't done well since I bought it.
Yeah, that's why, again, I don't care about news except that it's news.
Yeah.
It's a catalyst, but that's why I wait. And obviously, they use that for catalyst to go short. Yeah, it got up to the 2.5 deviation right here. So we're probably at least coming down to 23.94 ish.
Okay, so it's definitely coming down, huh? So I'll consider just getting out of it then.
Oh, you're long on it?
Yeah.
Oh, all right. Yeah, it's even on the CCI, you're under the zero. Slow stow, you're under the zero. We're probably coming back down to extremes on the slow stow, so that's probably telling you it's maybe trying to find its way back down to the average price right here. But long term, it's going up. So, you just bought at the wrong time for the wrong reason. But if you're in it long, it's going up. So.
Yeah. Okay. Yeah, I bought, I don't know, a
Oh, geez.
couple hundred shares to write covered calls on it, maybe. But yeah,
Yeah.
I mean, if you, I don't know.
Look at the weekly. This is hit the second sigma. We're definitely coming down.
Oh boy. Okay, maybe I won't. Maybe I'll just get out. I don't know. Maybe it's not worth it.
Well, you got to look at the charts before your plan isn't, oh, there's news, I'm getting into it. You go to the monthly, you go to the weekly chart, you go to the daily chart, and you plan the trade. I don't care what the news is at all. I care about the chart. Way overextended here. Massive, big topping tail. No, I'm out. I'm getting puts right here.
Okay, thank you
No,
for
it's
looking at
going
it.
to. It's three weeks ago I would have gotten puts now, but just to be safe, we're probably going to like 24.71.
Wow.
23.25. So well above the money line. So
Yeah, while we're looking at these really stocks that are getting beat down, Space is another one. Virgin Atlantic, and this has just been in downtrend from high 40s, and now it's
Space.
turning cool. Yes.
Yeah.
Yeah, you got it.
Yeah, I did a lot of homework on it back here. Yeah, I just I play this horizontally. Here's your range right here, and get rid of this garbage. The support is actually still slightly going down. So, but very slightly, which is good. It's a sign of finding a good base. But with that said, until it starts putting in a slight uptrend, it's just going to be what I call it's in the zombie state. It's
Okay.
really not. It's not going to do anything until it breaks out of this range right here. which is up to 1134 or so.
Yeah, that's a pretty large range considering it's at $1.80. That's
Yeah.
times 5.
Yep. But see, I just don't care about how low it is and how, how big the range is.
Mm-hmm.
I just don't play that. It's not worth my time. You're gonna have to. This is all babysitting, micro, scalping, looking at, playing it from the 5 minute chart. And the thing is, when it's in a range, it gets whippy.
Right.
And I don't want to be in. It's when any stock, I don't care what it is, the SPY, for playing ODTs, if it's ranging, you're gonna screw yourself just about always. As far as a momentum player is concerned, because as soon as the momentum starts going up, it tanks. As soon as it's tanking, you get in puts, it goes up. I don't. I just don't care for that. So, but that's just me. But no, I don't care about this until it breaks. The whatever that is, somewhere around here, the $9 and 911 area, something like that.
Right. When it's in range, it's kind of like a gamble, right? There's
Yeah.
indecision, and it's such a crapshoot. You don't know if it's going to go up or down.
Yep.
So it's just, yeah.
That's exactly right. So look at the
You guys look for confirmation.
Yeah. Now you could, on the monthly, you could say, hey, see, but now this is for like a 5 year hold, right? But we're pretty close to the bottom here of this range, but I just made the range because it just made a new stinking low. Well, back here it made
Right.
back here it made a new low at 588. Oh, we're at the bottom
Right.
of this range right here. I'm in. Oh, really? So that's why I don't get into this crap. When you're in a downtrend, see new traders, silly traders. Oh, I'm buying the dip. Oh, I'm buying the dip. I'm buying the dip. I'm buying the dip. I call that you are a dip if you're doing that. Downtrend, never buy the dip. It's just you're asking to lose your portfolio. You buy the dip on the way up. You buy the dip. Well, you wouldn't there, but right here you would. Right there, you're buying the dip and you're averaging up. Right, you're increasing your profits. Or if you don't want to average up, if you're not experienced, then I wouldn't advise it. By the way, I'm not a financial advisor, but this is where you move your stop loss up. Right. Now Friday, that's I'm a little bit more experienced, but I had puts, and I bought more here, and then we kind of had micro move, and we started to set an upward trend line. So what did I do right here? I bought calls. And I already explained that earlier why I did that. I forgot about that. We've been on for a while. So but yeah, so I mean, you could, if you really want, if you want to keep your eye on it, go on the monthly chart and just like what I did, set this downward trend line here, and wait for it to break the trend. Because this might go down to 50 cents and then starts coming up, and now you still bought it at the same price, $1.70 right here, which you think right now, man, that's a great price. It's $1.70,
Right.
the lowest it's ever been, right? But now you're sweating it because now it goes down to 50 cents, 40 cents, and you're like, oh, I'm gonna cut my losses right here. I'm screwed, and then it makes a big rip up, right? So to prevent all that worry, wait for it to break the downtrend, You could get in right there. I wouldn't. What I wait for is that when it breaks a downtrend, then it retraces, and then you get in, and usually that's about the same price as the break, anyways.
Right.
It might be $1.85 or something like that. But now you're in at $1.85 and you're sleeping well because you know it's putting in higher highs and higher lows, right?
No, that makes sense.
But if like this scenario happens, you're still trading within the trading range, so you better be careful to see what happens right here, because this could just be liquidity here, and it might even break and give you a false breakout, and then boom, it comes back down. So,
But when you're looking at that trend that you drew, um, what minute time candles were you at? Looking at the trend?
yeah, I would play this from the monthly chart.
Well, I meant yeah. On Friday, you were saying it was downtrend and then it was a micro uptrend.
Yeah, it's 5 minute chart.
5 minute. Okay, cool. Thanks.
I showed Alicia. Were you here from the beginning?
I think so, but sorry, it's so early for me on the West Coast. Sorry. Yeah, I
It's
don't
okay.
know.
Right? Really?
This is being recorded on, so it's on YouTube, and you guys can go back and watch it
Really?
again.
Gosh.
Yeah.
So it's just right here. We're in a downtrend. We start coming up, came back down, start coming up. So I set a trend line right here, and I got into put right here. I averaged down here. Right here's a dip. Average down. This is the scariest part because right here we have a trend line, but we haven't had a retracement yet, right? But as soon as I got this hammer, I got in here. I averaged down. And then right here is where I got some calls right here, and then I got some right here. So that's what you do. So I'm protecting my dip buys by hedging going up.
But then you still had puts, right?
Yep.
But you got into and then okay. Then you took profit like right at the bottom of that. Yeah, right there.
Right here I got out on my puts.
Mm,
I
cool.
averaged down on my calls a lot, and we made this big run up. Okay, what else?
Can you look at JMIA?
Oh no. You're still in Jamia? All right.
No, I haven't gotten in it yet. I've been watching it, waiting for the
okay.
bottom.
Yeah, well, I called it out a while ago. So here's the banana right here on the monthly. That's about where I called it at like 244, and we ran up to 474 or so. Matter of fact, that's still good to look at here. Okay, so on the monthly, this is going to be big, guys, when it breaks this downtrend. So now I called this play out. I don't know if it's the weekly or the daily. I think that was the daily. But yeah, I said we had a chance to come up to here, and we did. I can't remember what I said, but now we've come back down to this still a downward trend line. So when we break this, let's say next week we break it. If we break it, it could continue downward. The momentum is just kind of sitting here. It's actually starting to go south again. So we could break back down and break this trend line, and then I'd be getting puts. But if we do break this, I would scalp it and play this until we break this. So yeah, this is the daily. This could be right here, a liquidity grab, and this would be the point of interest, and that would have you break this, and that would be nice. So yeah, patience on this one. I'd wait. Probably going to take a 3-4 more months for this to play out on a big swing to the upside.
All right, thanks, Ronbo.
Yeah.
Hey, Ronbo, could you look at LLY?
Oh boy, I'd get out of that as soon as possible.
Not in it at all. I'm looking for puts. Kind of missed it at
Oh, jeez. Yeah.
There's a lot of hype on it, I believe, because of some it's like a weight loss drug or something like that, and they're supposed to have some catalysts next month. But I just think it's just up there. It's just a little too high.
Again, gee, Merry Christmas. 2.5 sigma up. Look at that. A big divergence pattern. We could have made
Started looking at it up.
crap
I know.
load of money right there.
Those
Okay.
puts printed so hard.
Yep.
Ugh.
Yep. Now we're getting into a little support area right here. So now, it's kind of tough. We got support right here, and there's a gap. So, you could get some 473s for a couple months out, 6 weeks out. Oh, this is the daily. Yeah, maybe 2 weeks out, but I'm afraid that here's the money line, and we broke below it. So now here's the fight. And funny, look, the high was Friday was hitting the money line on the daily chart. So if we do, for me to be I would be conservative. I wouldn't get into puts until it got down to like 451.53. But that's because if we break below that money line, and I'd want confirmation. I'd want to break this area right here, and we could be coming down at least to the. This is just the average price. It's no big deal. Way overextended here. So it's looking pretty bearish, but hey, man, right here.
I know. I'm sorry. I haven't been in here for a while. I'm sorry. I'm sorry about that.
It's not your fault. Or you could just get in right away and say screw it and get a little bearish FOMO, but then I would have my stop loss on this trend line right here. Let's see. We're at the 20. Let's see. See, now remember, October is usually a beginning to uptrend. So, what did I say? 513s, let's say. Let's be conservative. Go 515. your delta is only 17, but they're only 370 a contract. So if they get in the money, you're looking at pushing 15 bucks. So 370. You're looking at. Oh, wait a minute. There's two different ways of looking at that. 1, 2, 3, 4, 5, 6, 7, 8. 2,400 from 370. So, yeah, really nice run.
That's amazing.
Yeah, it's tempting. It would have been a lot better on this, well, especially on this candle right here. I would have been into puts. Yeah, my stop loss right here. But see, here's the thing: you catch us on scanners and stuff, and it's already, the move's been made, the initial move. Where if you scan for yourself, don't rely on scanners. Be the scanner, and find stuff before they hit the FOMO scanners. That's where you make the big money. That's where you make 2,000-3,000% instead of 500-600%.
Thank you. I appreciate it, man.
Yeah. Let's see what time
Is there a deviation setting that you can put on when it crosses out of the second level? The crossover. I'm trying to find it and I can't figure it out here.
Yeah, you have to set a different kind of a setting on this. This is so weird that I can't add another filter. I don't know why this is happening. Whatever. I want to see something here. Let's see if I can find a custom. I can't.
You have to do reverse crossover somehow.
Wow, that's so weird. It's not allowing me to set I'll have to figure this out later. Yeah, you could go to custom, you edit that, and you want to do a study. You could do deviation. Let's see, where is standard deviation? So this is if you don't have, that special one. So upper line, you're going to have to set, okay, it's based on the second deviation, right? So you can set it up to that. And your upper line is, so that'd be 2 standards up, 2 sigmas up, and then crosses below. Okay.
Okay.
And then, boy, you have to set a value or something like that. No, you don't want value. You might have to go to the study again. you should be able to just say is true. That's kind of weird.
Yeah, that's where I was puzzled at too.
Well, crosses below study standard deviation channel. All right, you have to go this way probably. Okay, crosses below the upper line. That's it right there.
Okay.
Now, what I would do to get a heads up on that, Granny, is I wouldn't do crosses below. I would do crosses above the upper line. Okay? Because now that gives you a warning saying, hey, whatever, Tesla's up above the second standard deviation. So now it's already on your watch list, of your bearish watch list. And so now you catch it. Let's say it goes to the 2.5 deviation. See, now you could play it. It depends on how aggressive you want to be. If it's at the second deviation and then it goes to the 2.5, then I would probably start getting puts at 2.5. If by some miracle chance it goes to the third deviation, then I would really load up. Or, that would be really aggressive. Or you could just wait for it to go to that 2.5, 3 deviation. Or let's say it just gets barely under this 2.5 and it starts crossing under the second deviation, then boom, you're in.
Yeah. Okay.
Right?
That's a good setting. That's what I was looking for, and I was having a little bit of problem. So thank you.
Yep. Well, heck, let's try that. So crosses above.
You can do the reverse for crosses above, and you can do the reverse crosses below the second sigma, right? So you can get calls.
Yeah, but you it's better to go with the market.
Okay.
So right now there's nothing crosses above the upper line. So there's nothing there.
Could be because market's closed.
No, this goes back. Oh, this goes back to yesterday. So let's go 4 days ago. Let's go a little. Let's go last 2 weeks. Say no, that's gonna be too much. Last 5 days. Last week. Wow, still nothing. Well, it's been awfully bearish, so everything's probably broke below it. So let's try this. Crosses below the second deviation. Oh, you gotta be kidding me. There's something.
They're also under maintenance right now too.
Oh, yeah. Sometimes that happens.
So we can set that up and then watch it because that's free. You just have to physically go in and do it.
Yeah, this one's free. This is a default. Yeah, there's something goofy with the deviation. See, the setup is for this anyways. Oh, no, it's fighting over this one. That's why. That's weird. Oh, on the 1 minute. No wonder. Gee, okay, we'll go to the day.
You need to take your other studies off first for it to work properly. This one, its own study.
See that this is my own. Now I got set up to the third deviation, so this is just a lot easier for me. So here's one just about down at the third deviation, next gen, NXGN on the daily chart. NXGN. You're positive. I'm sorry. So,
Wow.
It's wild. It broke the fourth deviation.
no, fourth. Here's the fourth deviation right here.
But it broke it a few days ago there, no?
No. Here's the price right here.
Yeah, but then it gaps up above it.
No.
There's a
right here.
huge price gap.
No, but if you go back 2 steps, like go down a step back and then go down.
You don't look at it like that. Here's the fourth.
Oh.
Here's the fourth right here. 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 That's how you remember.
Yeah, so
these move. These move.
yeah, so after that last red candle, it gaps up to the next candle and it's above it for like 3 little ticks there, or 4.
No, it's not.
There's candles above it. They're the blue ones, just up top to the left, just a little to the right there. Yeah, is that not above the deviation?
Yep. I didn't see that. I'm sorry. So it did.
That's okay. So have you ever? It never really does that, eh?
99.9% of the time, it doesn't.
Yeah.
Yeah, but they had news out. They're going to be taken off the listing. Another company acquired them. I just went back because I looked to see what the spike was about, and another company has purchased them. So yeah, they're going to be off the market. But that is interesting because you could catch that, and they said that's what the play was that day. They didn't get out.
Yeah, see that, but see, this is set up for a bearish move. Because all you do is wait. I would personally, well, for me, again, here's the money line. So when this breaks, when the money line is the highest candle on the chart, it breaks below that, she's going down. Here's the lowest candle VWAP right here, and we're looking at 2063.
So you would go and look and see when it's going to come off the listing, then when it'll be acquired, the closing date, and maybe play 2 days before the closing date for puts.
I just play the chart.
I mean, you don't want your time to run out so that you just lose your investment completely.
Yeah. This is just an example. Let's say there's nothing like that going on. I'd have like if I'm aggressive, I probably get. But see, now we could be coming up to 25.25 this week. But I'd be waiting for it breaking below the third sigma, and then I'd go a couple months out. This is the daily, so maybe a month out, and I'd be getting like the 17s. That wasn't the greatest example. So let's say Endeavor EDR. See, now if I had this watch list set up, I would have gone through all these already.
And you're welcome.
Yeah. So
no more homework.
Oh, big pinch. Big pinch going on. Yeah. Wow, it dropped on the dividends, huh? Interesting. Um, higher high, or higher low, higher high. Yeah, this is still going down though. I still might get puts on these. um, monthly, putting in quite the bottoming tail here, fighting over the average price. Yeah, this is just right in the middle of the range. I wouldn't touch this one. So, big numbers, big numbers. 2.7 OFIX. She's probably coming down to around 951 from 1226. This one might not be too bad.
That's a tighter scan. I mean, that's just one sigma, right?
Yeah, this is from the daily chart. That's weird. How did that happen?
Which ticker is that? Sorry, my screen's blurry.
OFIX.
It goes
October
blurry a little bit.
Foxtrot Indigo X-ray. Yeah, it has a negative 2.7 on it.
That's weird.
Oh, that's the weekly. That's why. There we go. 2.7.
Okay. So that has to be a news thing because look at the gap. It's a huge gap down.
Yep.
That's got to be something going on with that stock. That would be a quick play. Anytime there's a gap like that, you have to ask the why question.
Oh yeah. Oh, let's see. Oh, Dexcom, DXCM, huh? Okay. See the money line here? Boom, bounces off it. Now it just broke. Crap, I wish I would have saw that yesterday. This would have been pretty easy. You still could get into, boy, I don't know if there was news on this or what, but the slow still is already in extremes right here. But as we saw here and here, this could stay down here for quite a while. But this is why I use the CCI. We're already at support for the CCI. This could be now setting a higher low, and we start coming back up.
This one is a monthly one too. Options.
Yeah.
What does CCI stand for? Is it indicator you use?
Oh, I can't remember.
Or what's it similar to?
It's a
You can
standard
always look on
indicator.
Investopedia. On Investopedia. Too. It'll help describe more in depth.
Crap, I wish I would have saw this. Look at that.
Been a good play, wouldn't it?
Second deviation up right here at 164. I would have called out, now this is the monthly chart, so I probably would have went like a year out, but just to be safe. But yeah, you could have played that from 164 to 77.
Oh man.
Yep. And if I would have saw this on the first sigma up, yeah, there was a big divergence pattern here too. Big rushing. This is a rushing star right here. Very, very bearish. Would have played it right back down to the average price. Now the thing is, we were 2 deviations up. So I would not be surprised. Here's the support right here. I would not be surprised. Bring that line out here. You could go 6 months out. Maybe 3 months out if you want to be aggressive. And get like 48s. Oofda. Or what you could do is use this for your point of interest. Let's see, there's the gap. So this candle formed the gap. And this is what I do for longer term plays. Here's my gap. The point of interest is this green. So on the monthly chart, then you go to the weekly chart. Boom. All right. So your weekly, you want to look for some support and resistance somewhere around. There's some resistance or support right here. There's 2 touches.
It doesn't even go that low.
There we go. There's the support right there. Any more touches? Let's see, that touches 1, 2, 3 times right here. So there's another support. So those are my weekly supports. Daily, boom, we already hit it. Funny, we stopped right on it, but you're looking at 8 maybe. So Monday, if we stay below 87.48, we're looking at 83.83. And we could come back, and here's your target area. So right now, and I'm looking at hitting the this will continue every single day, continue going down. So you might be looking at 67.14, right? But if it breaks that, then I'm looking at the mid 40s. That's when I would really go short on it, if it breaks that level right here. That's what I do when I'm looking at everything through my scan. So that's a decent one. Decent. It's not awesome, but TNGX. Holy crap. See, anybody heard of Tango Therapeutics?
These are all pharmaceuticals.
Therapeutic, yeah.
Yeah, it's kind of a cool.
What I mean is, see this massive play, and have you heard anybody talking about it?
No.
Yeah, exactly. See this. You do your own homework. You set up your scan, and you're gonna find stuff no one's talking about. See, you don't want to get into the stuff that's being hyped. That you already missed the move. Now you watch that this maybe this week or next week, if it starts going up just a little bit, it's going to start hitting the scanners, and then you can see how much you already missed out. It's just but now we're at the on the monthly. Now here, this has a history of going to the third sigma. So if you want to get FOMO on this, no one's talking about it, but if we break around 1055-ish or so, you could probably play it close to the third deviation, up to 1328, scalp it. Too bad you can't. It's a therapeutic, so there's no options, but right, yeah. So
Wait, scalp it to the upside or downside?
you can't scalp it to the downside. You can't be. There's no options on it. So see, if all you're doing is playing unoptionable tickers, so that means you're stuck. You have to be bullish on it. Then you go to your scan, and all you're doing is looking for the ones that are, really low. Big Z. Oh. Okay, right now that's very, very temporary. See what's going on here? Okay, now we got to wait and see when and if this holds. If it breaks below, so I'd keep this on your watch list, big Z. Because we got a big divergence pattern here that's been forming since June of 22. This is not the perfect cup. It's not rounded per se, but we got a big divergence pattern happening here. And now this is going to require patience, but keep this on your watch list. Look at it once a week. See what happens here. First of all, you're going to want to put a trend line on this one, a resistance trend line. Put an alert out on it when it crosses above, because then what's going to happen is then if it starts coming up, now you have set this trend line, which was going down really sharp, less sharp, less sharp, and now it's going to be start coming up at a really, really nice, just barely going up, but we're still scalping it. But see, this is the weekly chart, so you might get a nice couple 2-week swing out of it from 672 to 787. You'll get over $1 out of it, and then you'll wait until it crosses this one, crosses above. So that's how you do it. You go through all of these and you're like, oh, okay, this one sucks, and you might have 200 of them, and you might go through 195 of them and they all suck, and then that next one might look promising. So that's where the homework comes in, but it pays off. So yep, we're in the overall downtrend on the weekly chart, and it looks horrible on the daily chart. But even on the daily chart, see, we're getting a divergence pattern here. Look what happened here. It ran from 702 up to 815. Another dollar move. So this looks like it might pop and break this right away. Maybe next week, maybe. And then when it breaks, now you're looking at a potential long-term, well, a short-term swing. But once it breaks this, then you're looking at a target of $20. Might be 2 years from now before it gets up there. But now see who's talking about Big Z? Anybody? No one.
It's a BlackRock company. It's a trust.
Well, still.
I don't know if that made any difference because it is a trust. I didn't.
No,
there's no options.
No, but what? No. This is just examples of what you could find.
Okay.
Right, and pretending that this is, but there's nothing wrong with putting some money in a trust that's going up. So
Yeah.
I agree.
So we'll wait and see what happens to this. Let's see what else. Charts. No, scan. Hertz. All right, Hertz is worth looking at on the weekly chart. We're going down. big negative month here. We have, for sure, we have support on the second sigma. That'd be awesome if it hit down here. What's the average trading range? Let's see. Holy crap, only 55 cents. Well, no, $1.61. Oh, that's October. Wow, month. Okay, so October. Gee, wish we had puts on Hertz yesterday. 550%.
Wow.
I mean, that was a $3.85 move for the month. This is the monthly chart. That's huge. I would say for sure, most likely we're coming horizontally. We broke. All right, we broke resistance or support. So we're at least coming down this month, probably down to 1153. Nightmare scenario coming all the way down to the second segment down. You're looking at like $8.06. But that's a pretty steep drop right here. So short term, okay, long term we're going lower, right? But this looks like I can't. It doesn't go out that far. Let's see if there's something back here. I don't think there is. So, I would wait. I'd watch this CCI and wait till it came down to the this extreme right here, because I bet it's going to go down here. Unfortunately, you can't do alarms on alerts. No, you can't. That sucks. I keep an eye on this, and if it hits here and bounces up on the daily, I might get like 1561s a couple weeks out. It might be a quick scalp to the upside, because this deviation most likely is going to give it a good little run up. You could possibly play it up to, oh, that's probably too generous. I wouldn't play it up to here.
It's a monthly.
Yeah.
They're only 16 cents. $15 strike. Not a lot of open interest.
Yeah, that's
But that'll
exactly
climb.
what I was going to look at.
Yeah. But the 1750 has more open interest.
Yeah, there's 2,000, what, and that's, oh gee, 3 cents.
3 cents.
Oh, funny. Look at the gamma. So someone knows what's up right here. And see, my scanner catches that crap. So, Hertz, this week I'd be watching to see when it bounces off here. I get into calls, or if they're so cheap right now, buy a couple. If it goes down a little bit, buy a couple more, and then maybe see a run up on this one. But remember the overall context. This thing's most likely is, you know, let's look at the 11s on the put side, or the 10s even. No one's even bothering with that. You might have to get the 15 puts, or you could just jump. You could just yeah.
So
Well-
puts overall would be good, but in the short term, maybe calls.
Yeah.
You're saying?
It would be a good hedge. You could get, okay, there's no open interest here, but believe me, if it starts going down, there's going to be interest there. But you could get, like, right now was the delta 25, or well, 24. You want, so the 12.5s, those would be awesome. They're 28 cents, so you can get the puts. And you know, again, this is a monthly, so you got a lot of time to be wrong, and then you could hedge your short term, right? The 15s are only 16 cents. I would say that, you know, the 17s, that's a stretch. See, your delta's 20 cents right here. So if anything, buy one contract of the 1250s. Get two contracts of the 15s. And then you get your run up, your back test. You make money off the 15s. Comes up to a, you know, that trend line or so. Take your money from the 15s, and take that money and average down on the 1250s, and then rake in on the next run down. And it's 12 o'clock, so I am done, you guys. This video actually might be too long to put on YouTube. We'll see. So
Thank you.
all right.
Thanks, Ronbo. Appreciate it.
Yeah, you're welcome, guys. Have a good one.
Good weekend, everyone.
Have a
You
good
too,
weekend.
brother.
Bye.
See you guys.
Thanks so much. Bye.